great to have your company on this 12th day of November. My name is Jessica Amir, market strategist here with Moomoo. Great to have your company as always. So what happened overnight in market news? Well, investors shimmied their profits from tech stocks that rebounded from last week's sell-off, taking profits from stocks like Nvidia and Micron, and instead parking some of those profits into healthcare stocks, as well as consumer staples and even energy. Now, remember, typically we see healthcare and consumer staples typically rally when we get not so good news about the state of the US economy, and that's precisely what happened overnight. But it is important to remember that investors who did buy into the Nasdaq 100 pullback that we saw last week, well, they would still be pretty happy because the Nasdaq 100 only fell marginally overnight, down 0.3% on Tuesday, but importantly, it's held onto its gain of 1.9% from last week's close. So basically, the takeaway here is this is a good sign, suggesting right now investors, the bulls are in control of the market. So that is important for you to note. Meanwhile, the Dow Jones, the blue chip 30 index, that hit a brand new record all-time high, rising 1.2%. And that was boosted by investors buying heavily into healthcare stocks. Specifically, what led the rally in the Dow Jones? Well, buying in Merck, Amgen, both of their stocks rose over 4%. Johnson & Johnson followed. And staple names like McDonald's, of course, that's a consumer staple. McDonald's did well following their results as well. So McDonald's is up 3% overnight. As for the focus for you and investors today, I would just like to pause and reflect on healthcare, why we should consider investing in healthcare. Well, the first reason is that we have to remember that when an economy is slowing, when it's barely chugging along, investors typically do well and are benefited from putting some money into healthcare. And why is that? Well, it's because as humans, obviously, we rely on pharmaceuticals, medicine, hospitals. We turn to these things regardless of what is going on in the economy. And healthcare obviously makes money when the economy is slowing or stalling. We all learned that in COVID, right? So why would you consider buying into healthcare? Well, here's a couple reasons. Firstly, it's been a buffer for portfolios when the broad market is falling. Specifically, I just want you to reflect on the fact that last week we saw the Nasdaq 100 fall 3.1%, while at the same time we saw the healthcare sector rally. Now, an ETF that I want to call upon to bring this argument into focus is a healthcare ETF that tracks the world's biggest healthcare companies that rose over 3.2% last week when the Nasdaq fell over 3.1%. So more gains in healthcare than were lost in tech. The other thing is that the healthcare sector is doing really well right now, and the healthcare ETF that does track the world's biggest healthcare companies, specifically HLTH, is the best performing ETF so far this month. It's up 4%. It's also holding steady over the year, up 7%. The second reason that you should consider getting some exposure to healthcare stocks or the healthcare industry is because it's a $9.8 trillion sector and it accounts for 10% of global gross domestic product. So the global economy spends 10% of its money on healthcare. The third reason that you should consider healthcare is that because governments each year are increasing their spending in healthcare, and that is precisely one of the things that is up for discussion amid the US government shutdown. Or also consider that 12% of Americans are reliant on anti-obesity treatment. So a lot of work needs to be done to fix the American healthcare system. And broadly, we all want to live longer. There's record amounts of money being spent into healthcare. So specifically, do you buy, hold or sell companies like Eli Lilly or Amgen or Johnson & Johnson that are hitting fresh highs? Or do you consider an exposure into healthcare ETFs, such as the one that we have covered today? So let's move to the investments to add to your watch list. Let's kick off with Amgen. Amgen is, of course, a US drug maker, and their shares jumped almost 5% overnight, taking this year's gain to 33%. And so its stock is doing really well. It's trading at its highest levels in well over a year. Now, remember that they not long ago reported their quarterly results, and they showed really good numbers. So broadly, everything did well. Revenue specifically rose 7% above expectations. So remember, when a company usually delivers better than expected goods, their shares usually rally. So revenue hit $9.6 billion. What was also really pleasing to see that its operating margins, its operating profits are at 28%. That's a far cry from the decline in CBA's profits that we talked about yesterday. Back to Amgen, they also reported strong free cash flows rising 28%. And the company has got a lot of tailwinds. They're basically selling more drugs than expected, specifically in a couple key areas, bone and autoimmune disease. But they've also jumped on the obesity train, developing a drug that I'm not sure if I can pronounce. It's called Martride. And that requires only 1 monthly dose, and it's demonstrating a 20% average weight loss in 52 weeks. So talk about a summer shred. If this drug basically gets approved, it could become a very profitable part of Amgen's business and also offset the weakness that they have been seeing from legacy oncology or cancer drugs. As for their stock, you need to consider that Amgen stock is rated as a buy among analysts, and that's on the Moomoo platform. For more information, head to the platform. Let's change pace to gold. All that glitters is gold. I've been a big fan of gold for some time, increasingly wearing my gold jewelry. So the gold ETF GDX is tradable on the ASX and in the US. And this ETF jumped 3.5% yesterday. So it'll give you exposure to gold. And so why are we talking about this gold ETF right now? Well, it's regained its losses from the past few weeks. It's now up a cracking 113% year to date. But I believe more highs will be on the cards. So why is that? Well, we've got to consider there's been a fresh push up in gold. Gold's up 5% in 5 days. It's tracking new 4-week highs. So where to next for gold? Why do I believe that gold will continue to rally? Well, remember the basics, that gold tends to do well when interest rates are cut, and interest rate cuts appear to be back on the table. Hello. We got some economic data out of the US overnight. So vis-a-vis US employment data, that actually proved that the US Federal Reserve, the central bank, may need to cut interest rates next month. Chances of a rate cut have now increased to almost 70%. So what does this mean? Basically means more highs could be expected for gold. UBS said overnight that gold demand will probably reach its highest level since 2021. JP Morgan joined in on my debate, saying gold could hit $5,000 US next year. Let's change pace to the final stock to add to your watch list today, and that is Xero, somewhat of a monopoly in accounting software. This is a company that's due to report financial results later this week. So their shares are down about 2% in the past week, and they've not done very well this year. They're down 15% so far. But what could spell a reversal of this trend is that analysts aren't really sure what to expect about their earnings. To be specific, analysts have downgraded broadly their earnings over the last couple of weeks. But what is really telling is I like to look at facts. Specifically, this stock has rallied the last 3 earnings reports. So keep your eye on that. Also, EPS is actually expected to increase. So although I just said that their earnings have been downgraded, the broad trend is up. So analysts aren't expecting as sky-high things, but all in all, earnings per share is expected to increase from 57 cents to 83 cents. As for earnings, that is expected to hit a record of $1.34 billion this time next year, and that's rising from just shy of 1 billion. Painting a picture of the bullish scenario of the stock over the long term by consensus or the average analyst out there. The average analyst says, yes, it's a buy. Macquarie says it's outperform, and it's got a price target of $228.90. That's far above what it's currently trading at, around $143.19. That's what it closed at yesterday. And remember, a buy rating on a stock basically reflects a bullish scenario for a stock over the long term.